Namaste, Vanakkam, hello all. Welcome to the second video of Paisa Bolta Hai. Today we are talking about is our money safe in banks? Let me pose a question to you, right? All of us maintain our banking relationship. We keep our money deposited in bank in various forms, the balance, recurring deposits, fixed deposit, and other products available in the bank. So as you maintain the balance in the bank, right, how confident that you are that your money is safe over there, right? What if the bank goes bankrupt tomorrow and you're not able to withdraw the money that you were maintaining in the bank? How confident you are that that particular money will be given 100% back to you? Let's assume the balance is 10,000, 1 lakh, 10 lakh, 50 lakh. Are you sure that the entire money that you maintain in the bank will be given back to you? This was a question which I posed in my WhatsApp community, Paisa Bolta Hai, and also in my resident community, just to check with my friends and neighbors if they are aware whether uh, they will get their money entirely back, right? So let's see what they have. Okay, so let's see what the poll results look like when I went to my WhatsApp groups. So as you can see on the screen, most of them said yes, we will get a portion of our money back. Hardly said that they will get 100% of the money or no money at all, and few of them were honest enough to say that yes, I do not know whether I'll get my money back or not. Is there guarantee or not, right? There is no such, many of them were not aware about it, which is absolutely okay. We may not know everything on personal finance area, but and this is why I started this particular forum, just to talk about these basic uh, information which we should be aware as an individual. Okay, so now before any bank goes into operation, right? Before any entity is given the banking license by the RBI, RBI has a very stringent process to give that license. So an entity has to prove they are creditworthy, they have the expertise in the field of finance, they can maintain the money back. So many of these banks which goes into the full-fledged commercial bank, first they start with as an NBFC. We'll talk later what's the difference between an NBFC and a bank, but so they start this journey in a smaller fashion, and that's when they go to RBI, apply for the full-time license, and RBI, after doing its all due diligence and everything, they give them these licenses. So now, RBI as the central regulating authority, they have to make sure that our confidence, our belief in the system, and our trust in the system of banking remains there. And how that trust can be maintained, if I know entirely, yeah, whatever the money that I'm keeping in the bank, I can withdraw that money as and when I want. The amount of money should be, I can withdraw as per my choice. It should not be a limit by the bank saying that okay, you maintain 10 lakh rupees in the bank, but today you can withdraw only 50,000, or per day you can just withdraw 10,000. I will not let you withdraw the entire money in one shot. So that there is no monopoly of the banks like that, they do not follow any undue unfair practices. RBI has laid out very clear guidelines on how a banking entity should be operating upon, and banks have to adhere to it. They have to file various kind of reports. They have to release the financial statements, which shows how healthy the bank remains. There are a lot of ratios, a lot of limits and everything which a bank has to maintain in terms of, oh, if they get 100 rupee, how much of that money they can lend to the people. So we will talk about it later in another video. So let's see, how does RBI ensures that our money in the bank remains safe, and what volume of that money can remain safe, right? We'll talk about it. So let's see. DICGC is a subsidiary which RBI created in the year 1968. It was formed with the objective of making sure that our money as an individual, you and I, whatever we maintain in the bank, that remains safe, that gets insured, so that our trust our in the banking system remains. We feel confident, yes, I do not have to keep the cash at home, or or just spend all my money in probably buying any assets like land, gold, or anything. If you want to maintain the money in the form of cash or cash equivalents, I can put that money into the banking system. So that's how DICGC was formed. So one, it provides insurance at a bank level. It doesn't provide insurance at the number of accounts you may maintain in the bank, which is you may have accounts at the same branch or a different branch, doesn't matter. RBI will provide insurance you as an individual only. It will not provide you insurance X insurance amount into the number of accounts that you're maintaining in the bank, right? But in a household, right, let's say I have an account, my wife has an account, my kids has account, so all those accounts will be insured separately. In an instance where if a bank goes bankrupt, DICGC ensures that we get our money back. Now, all these commercial banks, right, they pay a premium to RBI for getting this facility from RBI, and it is mandatory for them to take this insurance. So that is how banks are being regulated. RBI is very, very particular about how they want the banks to be operated in India. I know we will have certain other experiences as well of the banking industry, but as a whole, RBI as a watchdog is doing an amazing job to make sure our economy remains fine. Okay, so as you can see, these are the amount which have been released from time to time. And when DICGC was started, the initial limit was 5,000 at that point of time. Then later on, it got revised, and last it was revised in 2020. And from since then, the amount is 5 lakh rupees. So that is the limit right now. So even if you maintain 10 lakh rupees, 50 lakh rupees, 1 crore in your bank in various forms, the highest amount if your bank goes bankrupt, that can be the amount that can be returned back to you by RBI is 5 lakh rupees only. So if you are among those who maintain a lot of balance in your bank accounts in various forms, right, various instruments that we have, RD, FD, and other instruments, uh, I will probably suggest you that you split out that money across different banks. Do not maintain money in the same banks. From time to time, we have seen a lot of banks going bankrupt, a lot of banks not able to pay the money back to their depositors because the banks would have given so much of loans, and those loans would not have been uh, they were not able to get the money back out of those loans. So banks have gone out of operation from time to time in different fashions. So people would remember somewhere in the year 1990s, GTB Global Trust Bank had gone out of operation, and it was all picked up, I think, by Oriental Commerce Bank. So from time to time, depositors at that point of time, right, when a bank goes bankrupt and the depositors are not able to withdraw money from the bank, uh, for a period of time, because as the bank has gone out of operations, RBI has to take control of the bank, make sure, just do all those due checks and everything, how much money is left in the system and things like that, and then they allow people to file for their insurance claim, and within 60 days from the filing those claims, we can get our money back. So that is how DICGC is operating as a subsidiary of RBI and making sure that our trust in the system remains good. Now, these are the top 10 banks in India today, which these are the top 10 banks based on the market size, the equity market size, whatever the capital that they have in the equity market. Based on these are the top 10 banks. My trust is that if you maintain a banking relationship in these top 10 banks, you should be reasonably more confident. Definitely, we have accounts which are outside of these 10 banks. There are a lot of other banks as well, say like Equitas, DC Bank, IndusInd Bank, and all others, those banks, right, which are existing today. A lot of cooperative banks are there. Uh, so yeah, we can maintain our relationship with those, but it's always preferred to split your relationship if you're managing more than 5 lakh rupees in your banking accounts. With that, I would like to conclude this session of today. Before I move on, this is a very interesting book on the topic of economics. This book explains economics in a very, very simple way. No big jargons here. It's simple concept of economics, how it started, how how the trading started right from the barter system. Right, in the barter system as well, there are certain phases. So this explains it very good way. So I would suggest you to go through this book. It's available on all e-commerce websites. It costs you around about 200 rupees. It's a good book which you can read, learn a little bit about economics, and then you can also let your kid read about it. My younger one reads it and he likes these books and he recommended it to me, and I'm also going through it. So with that, I would like to conclude today's session. And just like the Paisa Bolta initiative, that we will keep on spreading the awareness on personal finance. So keep watching us for this space. Subscribe to our channels. Let us know what topic you would like us to present a video upon. We'll try to figure out more information on that and we'll present that information back to you. Thank you all. With that, all have a good day. धन्यवाद.